I'm going to be sending in the next presenter. This is Hubert Centers. Now, Hubert Centers is a skilled professional day trader and a successful entrepreneur. His philosophy is that if you don't need to accomplish something in life, find someone who is passionate about the topic of your interest and learn everything they know about it. That philosophy has made Hubert Centers a successful day trader today. He's also a firm believer that you need to have your own style and method of trading that works for you. He currently owns HubertCenters.com and is the co-founder of TradeTheMarkets.com. He and his companies have been featured on Bloomberg, CNN, CNBC, Stocks and Commodities, and Traders Expo, just to name a few. He holds a Series 3 and 30 license and is a principal at Razor Trading Holdings. Hubert, his wife over 20 years, Lisa, and their 3 children reside in Versailles, Kentucky, and you can usually find them at one of their children's sporting events. Please welcome Hubert Centers.
All right, so my name is Hubert Centers, so I'm going to talk to you today about how to risk. Now, oddly enough, on this trade here, I didn't risk $156. I actually risked only $100 on this trade, but I've been in it for almost 20 days now, and you can see that the original risk was way down here, and this is a gold trade. I'll try to teach you that, too, if I've got time. I only have 45 minutes to talk to you. So what I'm going to do is I'm going to talk to you about how to risk only $156.25 to potentially make $1,000. All right? Now, before I get started, I am registered. I'm a Series 3, a Series 30, and I want to make sure that the NFA and the CFTC don't have anything to come after me for. So I just need to make sure that everybody understands that trading is very risky. You are probably going to lose a lot, if not all of your money, trying to figure out how to do it. I always give a blanket disclaimer. Never trade with more money than you can afford to lose. You should always be trading with discretionary income. And I like to say, you know, a lot of traders end up like a bad country song where your dog hates you, your wife leaves you, your kids hate you, they take your vehicle and repossess your home. So just be careful out there in trading. You definitely want to make sure you know what you're doing, and even if you do know what you're doing, it's still a hard gig to do. So this is the market today. If you're long, you probably feel like this today because you're screaming like a little kid going, what's going on?
Welcome to GoToWebinar, Webinars Made Easy.
Junkie. I usually trade more and work more in my businesses than I do doing webinar presentations, but I do have a stack full of them that I do like to give. So it's going to be different in a good way. I've already given you the disclaimer, and usually you're supposed to start a big PowerPoint presentation with like how much money you make. Well, my story is a little bit different. Like I was born and raised in the coal mines of Eastern Kentucky. I grew up poor, made $1 million, lost it. Then I made another $1 million, lost that, and now I'm in the multimillionaire category. I will tell you, after the first $1 million that you make, it's a whole lot easier to make the second $1 million because you actually have the belief system that you can actually do it. Losing $1 million, not fun, wouldn't recommend it, but it's part of the process. I gave you a good disclaimer, but it's my belief that if you hang around other successful and driven people, like are in these photos, that some of that will rub off on you. You're still going to have to do a whole lot of grunt work and just hard sweat equity, and the harder you work, obviously, the luckier you will get. Okay, so let's get into this. Congratulations, you're in the right place at the right time, and here's why. First, we're going to do a little bit of math together. So let's go through a little bit of math. Now, this trade percent-wise is actually terrible. I mean, it actually sucks. If I was a trade that I could tell you to say, okay, this trade only works 3 or 4 times out of 10. Would you take it? Your answer would be like, probably not, no. Well, all that means is you probably just don't know how to do trader math, right? So if you give me a trade where I'm going to risk 100 to make 10,000 and it only works 3 times out of 10, I'll do that trade all day long because I know it's a good risk to reward ratio and it's worth my attention. So let's go through the math of this trade that I'm going to teach you here. So first thing, let me click on the PowerPoint one more time. Here we go. So we're going to pretend that we're going to take a series of 10 trades, which is going to be 10 trades, and we're going to hypothetically go, okay, we're going to lose money on the first 6, and that's going to be 6 trades times 156 is going to be minus $936. And then we're going to have 4 winners, and magically they're just going to be all in a row. So we're going to go, we're going to lose this amount right here. We're going to lose 936, and we're going to make 4,000. So then you just do it really quick. You just go 4,000 like this, and you go 4,936, and it magically comes out here to 3,064. That's a good trade setup that only works 4 times out of 10. Let's say it's worse. Let's say that it's worse, and let's say it's only 3 times out of 10, would you still do that trade setup? It depends. I got to know the math of the trade. Where you're going to have 7 trades times 156 and a loss, you're going to lose. You're going to net a loss of 1,000 on those 7 series. And then 3 trades, 3 times 1,000 is going to give you 3,000. And then your math is going to come out where you're going to end up netting about 1908. Now, it's going to cost you something for a round turn, but it's very, very small. It's not a huge amount. That's still not bad on something that only works 3 times out of 10. So on math-wise, now you're starting to realize like how all of us pros do this thing, right? So this is how we do it. If I know I'm going to risk $156 to potentially make $1,000, how many times, or what's the percentage that I want this trade to work out? Well, it could work out 1 time, and I would be pretty much break even on the trade. If it works out 2 times, I'll be in the money, and if it works out 3 times, I'm feeling just fine about the situation. All right, so there's 5 stages of trading. I have no idea what stage you are on. This is the stage that is the most common, where people are trading water, and I'm going to talk about how to go from stage 3 to stage 4. So the first stage is you learn how to lose massive amounts of money, and it's painful, and it sucks, and we all go through it. Second stage you get to is you then learn how to just lose little itty bits of bouts of money, and that's less painful, but it still sucks. And then what you do is you learn how to tread water, where you'll make a lot of money, lose a lot of money, make a little bit of money, lose a little bit of money. Very, very common. A lot of people get stuck at stage 3 and never get to stage 4, where you start making consistent cash flow. Couple main reasons that I have found in my 20-plus years as a professional trader is that, number 1, they don't use stops. Oddly enough, it still blows my mind. And they don't hold on to the winners long enough. That's the number 2 reasons right there. There's a third one, which is very common too, which they cash out. They take the money too quick. So in other words, what they do is they'll have a series of losses, and then they'll just take the first winner they have. All right? Now, there's 3 different styles, main styles of traders. It'd be interesting to see where you rank at. So the first style would be where you have a big old loss, a series of losses, and then you have a little bit of profit, 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 followed by a big loss, followed by a little series of profits again. So that's pretty common. A lot of people do that. I try to always do model B, where I have the situation like this, where I have a big profit, followed by a bunch of series of little losses, small little losses, followed by a big profit, followed by a bunch, and I mean a bunch of little losses, and they can go as deep as 50%, and then boom, and then another big gain. So this is the way I try to trade consistently. Sometimes it works wonderful, sometimes it doesn't work at all. And then C, hopefully you don't do this, where you've got big losses and little losses combined. That is just a recipe for disaster, where you just got all 3 happening. And if you do, get some education and stop trading and go seek some professional help. So next thing I'm going to do is I'm going to tell you a little story. So let's start with a story. It's called Aesop's Fable, where you've got the frog right here. I'm going to label him in case you F-R-O-G, in case you don't know what a frog looks like. And then you've got the old S-man here, the scorpion. So a scorpion comes up to the frog and says, "Hey, frog, will you give me a ride to the other side of the stream here?" And the frog goes, "Well, you have lost your mind. All you're going to do is sting me and eat me." And the scorpion's like, "No, no, no. I'm changed. I would never do that. There's nothing to eat over here on this barren piece of island. I really need to be the other side, where there's more fertile hunting grounds." And for whatever reason, the frog lets him on his back. He says, "Hop on." So the frog gets in, and about halfway through the stream, I'm going to make this the stream right here. About halfway through the stream, all of a sudden, the scorpion or the frog looks up, and the scorpion stings him in the back, and the frog goes, "Why? Why did you do that?" And he goes, "I don't know. It's in my nature." So he just could not help himself, as they both sink to their deaths in the murky depths of the stream. Now, the reason I tell you that story is to prove a point. And the point is, if you're trading something that does not fit your personality and style, if you're trading something that goes like this: run, stop, reverse, run, stop, reverse, run, stop, reverse. If you're trying to buy breakouts or breakdowns on that, that's your own fault, okay? You need to be trading something that goes run, consolidates, run, consolidates, run, consolidates, or goes run, consolidate, run, consolidate, run, consolidate. So if you're trading the wrong market with the wrong style, personality, and technique, it's going to be painful, all right? Now, you probably want to know what's the best market to trade. there is no best market to trade, but a lot of people will tell you when you first start trading, they're like, oh, you got to trade the S&P E-minis. It's the thing that's got the most volume, and everyone else trades it, so that's where you should trade. And then you end up trading the E-minis, and then what happens is you trade them, you get chopped up, and then you start asking yourself, what's wrong with me? Why can't I do this? I'm smart, I'm successful, I'm sexy, but this is just too daggone hard. What's wrong with this? Obviously, this game is rigged. Now, I know a lot of people will tell you stories about this game is rigged, all the institutions and all the professional traders kind of running against you. Oddly enough, we're all competing in the same market. We're all competing against each other. A lot of the stuff that you'll hear on the street is, you know, institutions this, institutions that, or big money, and it's very interesting to know what big money is doing. But just because they're doing that, you don't really know whether they're buying or selling most of the time. And I've got direct feeds to the S&P floor. I can tell you just as soon as big money's coming in. Sometimes it'll move the market. Sometimes it won't move it at all. And you never know if they're really covering a long or if they're covering a short or if they're getting long. So you have to be careful with that type of stuff. So just be careful there. And then you end up getting chopped up and you go, this is rigged. Well, the truth of the matter is you've been betrayed. And you're sitting there going, I knew it. Someone lied to me. Who lied to you? Well, don't worry. It's not your fault. They lied to you. They are who? They are the other traders, the media, investors, and it gets passed down from generation to generation. Did you test what market was the best market for you to trade, or did you just go, I'm going to trade stocks, I'm going to trade options, I'm going to trade futures, I'm going to try Forex, I'm just going to try just whatever I feel makes good sense. So if you like chocolate ice cream, and I just always offered you vanilla, and you're like, look, I don't like vanilla, I like chocolate, then why are you trading something that goes totally against your trading personality? Did you test it, or did you just believe it? So there's nothing wrong with trusting people. I highly recommend it as a general life choice, but you want to make sure you just do what my grandpa told me was trust but verify. So I can't see the Q&A, so I'll just go with this, like true or false. If you can trade, can you trade any market? Do you believe that to be true? True or false? If you can trade any market. I would say that is probably true with a big but. Yes, if you can trade, and if you're a decent trader, and if you've got the chops, and if you've got the salt, in other words, if you've got the skills in order to trade, you should be able to trade anything. But it's going to be a lot easier to trade something that matches your trading style and personality. So how do you figure that out? Well, if you don't match your trading style to the right market, it's going to be painful and very frustrating. Trading the wrong market or the wrong style for you is like hitting yourself in the head with a hammer. It's going to feel great once you stop. So let's think about this statement. What's wrong with trading better quicker? There's nothing wrong with trading better quicker. So what I'm going to do is I'm going to teach you some tips and tricks of the trade, because everybody likes the tricks of the trade. Now, you're still going to have to put in a lot of hard work in order to make all this work. I do not want to blow smoke up your rear end and tell you that it's all sunshine and roses, because it's not. Trading is hard. Anybody that tells you otherwise is lying to you or trying to sell you something. Trading is hard. You're going to lose a lot of money trying to figure out how to do this thing. Fact. You're either going to pay one of three ways. School of Hard Knocks. You're going to pay somebody else to teach you their tips and tricks, or you're just going to lose a lot of money, or you can do a combination of the two where you do the School of Hard Knocks and get some education. All right. So one of the best ways I think to go about it is to use an average true range, which is a standard ATR. And an ATR is just going to tell you how big the range is. So you can see here in the Dow it's 93 points, and the S&P it's 10, and the NASDAQ is 25, and the Russell it's 9. So this is how much money you're going to make or lose times the tick value of each one. So you could make or lose $465 a day, make or lose $515 a day, make or lose $518, make or lose $990. Now, these markets right here, all four of these, 1, 2, 3, and 4, they trade like this. They go run, stop, reverse, run, stop, reverse, run, stop, reverse, run, stop, reverse. They're very choppy in nature. We call them sprinters because they go run, they stop you out, and then they reverse and go in the direction that you originally thought they were going to go. Now, the bond market has about a point range, and you could make or lose about $1,150 in a day. The cool thing about the bond market is it'll go up, and then it'll do a controlled pullback, then it'll go up, controlled pullback, up, controlled pullback, up one more time, and then it'll sell off. That's the personality of that market. So which one would you rather trade, A or B? Now, I trade both. For me, I'll trade anything. If I thought I could make money trading Tic Tacs or toothpicks, I'd do it if there was a market, right? Crude oil, on the other hand, here, it moves about $1.80 a day. It's times $1,000, and it's $1,800 plus or minus. Now, the only bad thing about crude oil is it's bipolar. It's kind of like that crazy ex-girlfriend that you had in high school or college, and she's just a little bit bipolar. So you got to be careful with the crude oil. And I'm not trying to be sexist. It's kind of like that crazy ex-boyfriend that you had in high school or college. Silver, stay away from. It's just hard to trade. Gold, I trade a lot of gold. This is also a really good trending market to trade. And that trade that I showed you earlier where I'm up $5,000, $6,000, $7,000, that's actually a gold trade that I'm in right now. So first you want to know what your average true range is. If you got something that's got a real small, thin average true range, it's going to be hard for you to get in there, get yours, and get out, as opposed to if you have something that has a real big, wide average true range. It's easier for you to get in there, get yours, and then get back out. So make sure that you pick correctly. So I'm going to be talking about trading bonds. I don't know if you've ever traded bonds before. Usually when I do it, most people trade stocks or options or futures, and they don't really know anything about bonds. They're like, are you going to talk about like CDs like my grandma and grandpa had? No. I'm just talking about the 30-year bond. So if you've traded a stock or if you've traded options or if you've traded futures, it's the exact same thing. You do need to know a few things really quickly if you've never traded them before. They're very methodical. I'm going to teach you the months, the time, the cautionary periods, symbols, tick values, and the domes and the margins, and then I'm going to teach you a couple trades, okay? Now, I've got 70 slides. There's no way I'm going to be able to get through all of them, so I'm going to skip some of the non-essential stuff. You don't need to know this. This is the months of futures. It's not that important. What you do need to know is the next slide, which is going to give you the months that bonds trade. So it's going to be H, M, U, and Z. So it's going to be, let me end here. So this would be like H, M, U, Z. So you go H, and usually the contract for the bonds is US. So it'd be US H, and then it'd be 14. This would be the year. This is just the month, and this would be March. Does that make sense? And then you'd go USM 14, which is what we're trading right now. All right, and we've moved over to June. So you could go USM 14. We know that's trading the June month. And then you could go USU 14 and then USZ 14. So how the bond market works in most futures markets, you always just roll them over. So how it works is, in the second week in March, we roll over to June. In the second week in June, we roll over and start trading SEP. And in the second week in September, we start trading December. That's why they're called futures. So a bond is nothing any different other than it's just a straight-up futures contract. Now, you are going to need to know the specs. So I'm going to teach those to you really quickly here in just a second. This market opens up at 6 p.m., closes at 5 p.m., means it's open 23 hours a day. So it's really good. So if you're trading something, if you're trading stocks or options or Forex is a better market to trade than sometimes stocks are. This means that you're not going to have a lot of gap ups and gap downs, because there's nothing worse than being long a stock and it being gapping down the next day. So this will enable you to have a stop in, and you can use a GTC order, and you can trade the Globex, and it's only down for 1 hour a day. The open outcry, in other words, the pit session, opens up at 8:20 and closes at 3 p.m. East Coast time. Now, this is how it works. This is a cheat sheet for a bunch of the different contracts that I trade. So this is the @US. You can see that it trades. It's got some really good volume. That's the 30-year. This is the 10-year. This is the 5-year, and that's the 2-year. I'm usually mainly trading the 30-year or the 10-year when I'm trading bonds. You can see it's got a lot of volume. You don't have to worry about that. Opens up at 6, closes at 5. It's worth $1,000 a point. It trades in a weird increment, though, 0.031, which means it's going to trade in 1/32 of a tick. All right, that's a minimum move. If it goes up a tick or down a tick, you're going to make or lose $31.25. All right, and I'll show you exactly what that means in just a second. Interest rates. You need to know when interest rate hikes are coming. The best calendar to use that, in my opinion, is Intraday. Go to Intraday, and you'll know exactly when things are happening here. And you can set it up, and if there's a red star or if there's a yellow star, then you know that merits extra market attention, and you need to be cautious around that time. All right, so tick values. I'm going to skip this slide, and I'm going to go right to this one. Some different platforms do it differently. For TradeStation, they use US. For Infinity, they use ZB, and for TOS, they also use, I think think it's ZB. I'm not sure. It might be US. Anyway, it's just if you're a TOS user, you know what your symbol is. So if you watch any slide, this is the most important slide to look at. I'm going to teach you. So if you've never traded bonds, look right now, pay close attention. This is how this works. So if you were long here at 135, so at 135, and it went from 135 to 135 and 1/32nd, you would make $31.25. Does everybody get that? So if you moved a minimum tick, which means from 135 to 135 and 1/32nd, you'd make $31.25. Now, a full point in a bond is 32/32. So if you go from 135 all the way up to 135 and 31/32, and then you went to 130, the next one, that would be considered 136. So here in this example, let's say we went long at 135 and we held it all the way up here. In that case, you would make a full point and you would net $1,000. Now, if you're short, you would lose $1,000. Okay. Now, the average move on bonds is usually about a point, so you've got the ability to either make or lose about $1,000 in a day. Okay. So that's how bonds work. Don't worry about how they're where they're going 135, 12/32. You don't really have to know how to do fractions. This is back in the day how stocks used to be quoted too. 5/8, 7/8, 3/16, all that good stuff. 9/16. So that's how that works. This is how it works on different platforms. On this platform, they're doing it in fractions. 132, 132 and 1/32, 132 and 2/32. And then over here, they're just doing it in decimals where it's 133.12, which means 133 and 12/32. 133.13/32. That's all that means. So it's not that complicated at all. All right, now there is something important that you need to know is I do a lot of them in the afternoon, I should say in the evening when the bonds open up, and here's why I do that. Number one, you can trade them as low as $300 to $500 intraday margin. And if you do a trade, let's say at 9:30, and then you execute it, and you're out of it by 5:30, okay, that's going to be considered intraday margin. If you enter a trade at 9:30 and then you exit it at 6:10, all right, which you can't even do that. So the market opens up at when it closes down, then that would be considered an over. That would still be an overnight trade because you initiated it at 9:30 and you held it overnight past the day close, okay, because the bonds open back up at 6, okay. So this would actually be 4:30, not 5:30. All right. Now, if you initiate a trade at like 6 p.m. at night, and then you hold it till the next day until 4:30, oddly enough, that's still intraday margin. But if you enter at 6 o'clock p.m. that evening, and you held it until 5:30, which the bond market closes at 5, if you enter at 5, if you enter here and you exit here, that's considered overnight margin, and it's going to cost you more to hold that in the overnight session. So what you're going to do is you're going to initiate this trade in the evening session after 6 p.m. You're going to initiate this trade after 6 p.m., and that's going to give you the ability to stay in it as long as 23 hours so you can get as much profit as you possibly can get in the trade. That's why we're going to do it that way. And you're going to pay a lower intraday margin. So this is how the bond market works. The 30-year bond goes like this. It'll go up, and then it'll retrace, and then it'll go up, and then it'll retrace, and then it'll go up, and then it'll retrace, and then it'll go up, and then it'll sell off a little bit. Now the cool thing about this is these pullbacks are usually very controlled. This market is very methodical. We call it the grandma market because it moves so slow sometimes. Usually a pullback will consist of either 8, 12, or 16 ticks. So what I do is I don't pay attention too much to the 12. I go, if the bonds have only moved 15/32 in a day, then I want to buy 8-tick pullbacks. If they've moved more than a full point, then I want to do 16-tick pullbacks. So in other words, on this case scenario up here, it makes a top, it pulls back. I'm going to try to buy an 8-tick pullback and see if it's going to continue on its merry way. If it went like this and it had moved a full point, then I would have to wait until it retraced 16 ticks, tag it, and then see if I could get it to continue on up higher with me. All right, so let's go through the rules. These are simple, easy to follow rules. These are not complicated. This is an 8-tick reversal trade. So I'm going to skip all the text, and I'm going to show you here on the first thing. So before we get started, you got to know that you're going to take some losses on this. Anybody that tells you that they don't trade and they don't take losses is lying to you. We all have losses. We all have them. So in this trade here, you can see, number one, I lost on this trade. I shorted it here, got stopped out here. I lost $156. Once again, I shorted it here, covered it here. I lost $156. Next trade, I shorted on an 8-tick reversal after 6 p.m. And then my target is going to be 32 ticks, which is a full point. I cover it down here, and I make $1,000. So not bad. Out of 3 trades, 2 of them sucked. In other words, I lost money on them, and 1 of them was decent. Okay. So I'm going to whip out my iPhone here really quickly. It's not too bad. And the heads up, you don't have to be a math genius in order to trade. I am terrible at math. 156 times 2 is going to be 468. So we're going to go 1,000 minus 468. You're going to come out with $532, right? So not too shabby. So now, we're going to pretend for these rules for the rest of the PowerPoint presentation, we are going to pretend that the bond market is in a daily downtrend. Oddly enough, right now in a live market situation, bonds are in an uptrend, and you should be buying any pullback on the bonds. But this is just a snapshot to teach this case in a perfect scenario. So you can see this is a trend line. We broke the trend line right here, and ever since then we're saying, okay, bonds are definitely in a downtrend. First rule, you got to know which way the daily trend is telling you in bonds. Boom. Now that we've got that established, if we know that the daily downtrend is down, then what we want to do is we only want to short bounce ups. We never want to go long. We only want to go short. So here's at 6 o'clock. It's 6 p.m. And you can see that you got a nice little sell-off, okay? And here's the 6 p.m. open. I let the market, check it out. The market opens up here. It goes up. I don't want any part of that. I'm going, please sell off, boom, it sells off. There's a low. It starts to bounce. I go, okay, off of this bounce, I'm going to place a trade to short it when it bounces off from this low up here 8 ticks. So I short it right here. I use a 5-tick stop loss, which is $156.25. And my target is going to be 32 ticks, which is going to be 1,000. So here's where I come up with this magic math. I'm going to risk 156 to potentially make 1,000. I short it there. I hold on to it. I'm asleep at this time. This is why this trade actually works so well. I'm in the trade. I'm in bed. Obviously, I'm not awake when it bounces, so I can't jump out and go, oh, my God, take my profit. Get it. Give it to me. I'm just asleep. I can't do anything about it. I do have a stop loss. If it bounces up, stops me out, I'll take the loss. No problem at all. But I'll let the thing kind of percolate, kind of like a crock pot. Now, if I would have missed that one, check this one out. This one would have worked. That one would have worked. This one would have worked. This one, too, would have worked, but it would have stopped me out because it would have I would have risked 5 ticks, so I'd have been stopped out on that one. So we would have had 1, 2, 3, 4, 5 opportunities, and 4 out of the 5 on that one would have worked. That's a weird scenario. It doesn't work like that, okay? But that's a pretty good trade setup, okay? So let's go through it one more time. Here's the 6 p.m. open. The market, I got it pegged as a daily downtrend, so I know that the bonds should continue lower. And then see how it's methodical in nature, how it's going to break down. It's going to retrace. I'm going to short it here. My stop loss is this yellow line, and then notice, goes down and then up, down, then up, down, then up, sells off, and then it retraces some of that. Remember I just told you how it went? It goes up, pull back, up, pull back, up, pull back, and then it pulls back some more. So there's my profit in that trade, and here's a snapshot of my P&L. That's one of my smaller real accounts. On this case scenario, I only had 1 contract. As soon as I woke up the next morning, I went ahead and moved the stop down. I locked in $375 in case it kind of bumped up against me. And in the next couple of minutes, I ended up booking a $1,000 profit on that trade. So that's the 8-tick reversal trade on the bond market. That's an 8-tick reversal trade on the bond market. Now, that's a very easy trade to do. I know not all of you are interested in overnight trades or swing trades. You're going to make more money if you overnight or swing trade, way more than you ever will day trading. I've been trading for 20+ years, and it's just easier to do, and it's easier to teach, and it's easier to make money. So let's talk about a sneak attack trade. So I want to thumb through this because, like I said, I only have so much time to teach you these setups. And let's do another trade setup. All right. So this is also the bond market. And if you hang tight with me, I think I'm going to have enough time to maybe teach you that trade that I'm in gold right now, which is called it's an Ichimoku long, and it's a good night gold trade. And usually what I do is I usually risk 600 to make 6,000. But on that example that I'm going to show you in my live chart, I actually only risked 100, and I'm up, I don't know, about $7,000 on the trade. But I'm actually looking to make a lot more than that. So I'll teach you that trade. So number one, we've got the bond market here. We've got the daily. It's broken this uptrend line. We're going to call it a downtrend. We're going to say, okay, we're in a downtrend, so I only want to short things. I don't want to go long anything. All right, so first, our bias is to the downside. What we're going to do is at 7:20 in the morning, we're going to mark the open, and then we're going to, at 8:20, from 7:20 to 8:20, we're going to bracket the market. So from 7:20 to 8:20, we're going to look for a high and look for a low. So you don't really have to do this until 7:20, okay? So at 7:20, you look back, where was the high and the low at 7:20? All the way to 8:20. So this hour range right here is what's important to you. We're in a daily downtrend. We want to ignore all longs and only go short because we're smart and we like money, okay? Then what we're going to do is we're going to bracket the trade. Here's our high. There's our low. It breaks out of that range, and should we go with this long when it breaks out? No, we're going to leave it alone. This makes no sense at all because we're in a daily downtrend. We're like, if it goes up, that's fine. It just goes without us. Then what we're going to do is we're going to bracket that. Now, here's one of the key points. If the 60-minute range from 7:20 to 8:20 a.m. East Coast time, if it's 17 ticks or less, you can do the trade. If it's 17 ticks or greater, you can't do the trade. So that's a rule that you need to write down. On the first hour, first 60 minutes, I'll just say first hour, from 7:20 to 8:20, if this range is bigger than 17 ticks, then you can't do the trade. If it's less than 17 ticks, you can do the trade. The reason being is if the bonds have already moved 17 ticks in the first hour, heads up, the move's already over with, you've missed it. So first, from 7:20 to 8:20, we're going to say 145, 31 seconds minus 145 and 21 seconds. Don't let all this math confuse you. All you're doing is you're going 21. You're doing 31 minus 21 equals 10. So is 10 ticks less than 17 ticks? In most countries, the answer is going to be yes. Okay, great. We're going to bracket that. There's our high. Here's our low. And then what we're going to do, as soon as we break out to the low side, we're going to short that new low. We're going to risk 5 ticks. Okay, and then our target is going to be 10 ticks from our entry because our first hour range was 10 ticks. If this range would have been 12, our target would have been 12. If it would have been a 13 tick on our first hour range, our target would have been 13 ticks. So T1, target 1, will be 10 ticks, and then we can kind of go 20 ticks and then 30 ticks. All right? So there's 2 bond trades I've given you, the overnight gold trade and the sneak attack on the bond trade. All right? So here's another look at it. Here's the 720. Here's the 820. We're at 10 ticks. Then we're going to let it go break out away from us. Here's the low. There's the high. We're going to let it break down. As soon as it breaks down, we're going to short it at 145 and 30 seconds. This is our stop loss line. You can see it never gets hit. And then here's our first target, T1 at 145 and 30 seconds. Obviously, you can see T2 and T3 also met in this cherry-picked example. Okay. So these are some of the trades. Now, it's really, really important. I know I've still got some time, so what I'll do is I'm going to go through the rest of my PowerPoint presentation here really quickly, and then I'll show you the gold trade, and I'll show you a couple of things I think you need to be prepared for in the markets in general and where you should be putting your cash. Okay, so it's very important that you have really, really good money management. That's the key to life. You got to have some good entries. You got to have some really great exits. When that happens, the profits will increase. The profits will then make you more confident. Confidence doesn't come first and then profits. It's usually the profits come first, and then the confidence comes, and then you can just trade larger size, and you can make more money. Now, heads up, double-edged sword, you can also lose more money. All right? So you got to have some good setups. A good setup that goes executed will beat the pants off of a perfect setup that goes unexecuted. Good is good enough. Do not try to filter out all the losers or the stop-outs. This is a fool's game and for suckers only. Enjoy the process, work through it. You're going to have some wins and you're going to have some losses. Now, I have got a course that I do on it's called My Favorite Trades. And what I'm going to do is I'm going to give you a link here in just a second. I've got a link somewhere. And then what we're going to do is we're going to spend the rest of the time going through some live charts really quickly. So if you go to hubertcenters.com/March, you can buy this at a discount. Okay, My Favorite Trades normally sells for $197. You can have it for a 50% off discount. Your special offer is $97. All right, the deadline is for the first 50 people. You can call area code 859-963-3445. Operators are standing by right behind me. As you call in, I'll hear the phone ring. And you can go to the link hubertcenters.com/March. hubertcenters.com/March. So that is the special offer I had for you. And you're probably saying, what is this My Favorite Trades? Well, number one, it comes with a 100% money-back guarantee. No questions asked. If you don't like my accent, I'll give you your cash back. Okay, I just don't need the hardship or the pain. If you don't love it, I don't want your money. I always over-deliver, and I give you my 10x value. If you don't think you're getting at least 10 times your value, you know what? We'll just give your cash back. So here's what's covered in the class. Let me get it here really quickly. So when you click Add to Cart, in the Add to Cart button, what happens is you are going to see a slide that looks like this. Learn to scan for day trades, swing trades, and long-term stock setups on demand right now. When you click Add to Cart, you'll see my ugly mug right there on the picture. Just click Add to Cart. And then as soon as you check out, you will have a series of videos that you can watch on demand online. So each video is about an hour long. There's 1, 2, 3, 4, 5, 6, 7, 8 hours of video. And then I also did some live trading showing you this is all theory, right? This is all theory. And then I said, hey, let's throw out the theory. Let's just go live trade together. And these are re-recorded live sessions where I traded in front of you live, showing you the exact same thing that I showed you on the situation where I'm going, all right, this is my favorite trade in gold. This is my favorite trade in crude. This is my favorite stock trades to do. These are my favorite Forex trades to do. So here's what's all in the information. Module 1, you get stocks, swings, and day trades. It's my favorite ways to scan the markets for swing trades. The best way to scan the markets for day trades. How to filter the best trades to take. And also, we go into Module 2 here, stock, swing trades, and day trades. I teach you the 7 horseman trades. There's 7 stocks that beat earnings 90% of the time consistently. Okay? And then there's 7 stocks that beat earnings 80% of the time consistently. I'm going to show you all 14 of those. I'm going to teach you how to trade stock gaps plays, and I'll teach you how to do gap and go situations also, and gap and craps. Because if you don't know how to do gaps the right way, it can cost you a lot of money. So there's gap and go, and there's gap and crap, and it's pretty easy to figure out which way it's going to go. All right. So that's Module 2. In Module 3, you're going to get Emini day trades. How to trade gaps on index futures, how to do an ambush trade, how to do an 85-115 trade, and then I'm going to talk about the crescendo trade. This is like having today's newspaper tomorrow. It's an awesome little trade, and oddly enough, oh my God, it's setting up right now. We'll do it right here live. That's awesome. So I'll show you how to do that trade because we've got a crescendo trade set up today. Module 4, E-mini day trades, the famous Goodnight Gold trade where I teach you how to risk $600 to potentially make $6,000. Great little trade. Gold rush trade, and then a gold bug trade. So that is Module 5, or Module 4. Module 5, believe it or not, I already taught you how to do the overnight 8-tick reversal and the sneak attack trade. Now, in the course, I have a lot more time to spend with you instead of 45 minutes. I can go through it in detail, and you can ask questions and stuff. So it's a pre-recorded class, but if you got any questions, you can just call us. So it's for the first 50 people, and the link is hubertcenters.com/March, hubertcenters.com/March. I will also give you the telephone number. It's area code 859. It's 963, and then it's 3445, okay? So there's the telephone number for you. You should have both links in your chat. I guess they're promoting them to you. So let's go through really quickly. I don't think I have any more slides. Let's go do this overnight crescendo trade setup. So here's a gold trade. So today in gold, I was up $72.90 on the day. I'm looking to make anywhere from $12,000 to $20,000 on that trade. And right now, if you're not in this, you should be in some corn futures. And if you don't like trading corn futures, you can get in this right here. Get in DBA. All right, DBA is a agricultural ETF. It's a really good trade. We have a lot of our members in it right now. One of the best markets to trade this year is going to be commodities: gold, crude, corn, and all those. But right now, specifically agriculture futures are doing really good. If you don't like to trade futures, just trade DBA. Or you can trade corn funds, C-O-R-N. That's a really good market to trade. And you can see, let me show you some of these moves that you're about to get. So look at this. At KC is coffee. You've already missed a massive move in coffee from 120 all the way up to 205. It's not that hard to trade. If you don't like trading futures, trade JO. That's just JO. Same thing. It trades just like a stock. Here's corn at C. Corn is amazing. It's a great little trade we're in right now. If you don't want to trade corn, you can trade CORN. There you go. It's the same daggone thing, CORN. Or if you don't want to do that, you can just go DBA, which is going to be an ETF on agriculture products. That's a really good trade too. That's where you should be putting a lot of your cash. This year, this is going to be the place to put your cash right here. And it's not too late. You can get back in on controlled pullbacks, all right? So it's not too late. So there's this one trade that I like to do when the trend reading. So number one, the first rule here, let's go at YM dot D. So let me show you this trade right here. So you see the YM. Did it close lower than it opened today? Yes or no? Answer is obviously it did. It's down 296 points. Okay, now, is the trend reading above 1.50? Right here. Is it above 1.50? Answer is you bet you it is. So I have to get long the market tonight, right now in just a few minutes, if the market open up for us. I need to be long, and I'm going to use a 40-point stop loss and an open target. Let me show you what happened the last time the trend reading closed above 1.50, and you can see right back in here what happened. See where the trend reading closed above 1.50 right here? What happened the next day? Pop. Nice little pop, right? You had a really good trade where you had a huge gap up. So for me, I need to put my money where my mouth is. So what we're going to do is we'll go over here to the Trade It tab. We'll shrink this chart down. We'll go over here. We'll look for the Emini that we want to trade. We're going to go with the Dow. What we'll do is we'll go to the Dow. We want to trade we can trade the YMH14. That's the March contract. But I want to stay in a little bit longer, so I'm going to trade the YM June contract. It's got less volume, but I'm going to trade that one. We're going to put it in here. We're going to do a one lot. I want to make sure I've got it set up right here. I want to risk 60 ticks. Okay. And I'm going to have an open target. I'll just say I'm going to look for at least 200 points on this trade, okay? So this is on the YM, and then what I'm going to do is the market is actually closed right now, so I'm not going to be able to execute. I can still hang it out there. Let's see what happens. Buy market. Yes. All right, so I've got my market order out there. So as soon as the market opens up, I could potentially get a feel. But this market right here opens up again at 6 o'clock. So this is the trade I'm going to be doing. I'm going to be going long market. I'm going to be using a 40-point. I said 60. It's actually 40. A 40-point stop loss, and then I'm going to have an open target. So I'll do 300 points here. And as soon as the market opens back up, I will be off here because I'm only on until next 15 or 16 more minutes, and then I think I'm good to go. So that's the trade that I'm going to be doing. So I'll show you one more time as an example. When the trend, if the market closes lower than it opens, and if it had a nasty little sell-off, and if you have the trend reading that closes above 1.5, your job is just to get long. So let's see when the last time that happened again. Go back over here. And nope, didn't close there. Didn't close there. Nope, nope. Okay, here's one. So the market, it was a down day, and it actually closed lower than it opened, just barely. And then the trend reading closed above 1.50. We get a gap up the next day. Now, if I lose 40 points, I lose 40 points. That's called trading. They call this thing that we do trading. It's kind of the same way they call it fishing instead of catching, or hunting instead of killing, right? So I'm going to flip back over here to the Trade It tab, and usually at this point I would take questions. Josh and Christopher, when is my timeline? What time do you guys need me off here? Just double check here. Make sure I don't want to go over into anybody else's time. I think I've got till 4:45. It's 5:45, sorry. Right now? I think I'm done, right? I should be done. All right, so I will give you the link to the offer one more time. It's hubertcenters.com/March, hubertcenters.com/March. You can also call the telephone, area code 859-963-3343. 445. That's it. Thanks for having me. Oh, we got 5 more minutes. All right, so I got 5 more minutes. If you guys want to ask questions, I guess you can. I just can't see them, so I don't know how to do that. So I am going to, I'll talk about charts for 5 minutes. When you need it, Christopher, you just let me know. I'll talk about charts really quickly. Discard. So let me show you why you're going to want to be long some agriculture futures, okay? So let's go back over here to this chart. We will go at KC. So you can see coffee is moving like crazy. That's a good trade. Go back over here to the bubble. Here we go. Easier to do on this trade right here. Now let me show you. I know I talked and covered a lot of stuff. Hopefully you guys got a lot of value out of it. Let's take a look at the markets that you're going to be looking at. Got 5 more minutes here. Okay. All right. So if you go at C, here's what you want to do. Anytime corn goes back to 472 5/8, that would be a decent long. This is called Ichimoku. This weird cloud-looking creature thing here is called Ichimoku, and it's a great way to let you know when something is in a valid uptrend, and you can buy pullbacks or a valid downtrend. Notice here, let's take example something like, Tesla, TSLA. Tesla has been a crazy little stock ever since it crossed above the cloud here. It's been a good long, and you want to buy the yellow and the purple as support as it goes higher. Let's take a look at PLUG. PLUG, here's a nasty little stock that's actually going to lose a lot of people a lot of money. It's been a serious long right here, and you've been buying all the pullbacks. If it gets close to support, you always buy it. You had one heck of a nasty sell-off yesterday. Let's go PCLN, Priceline. Priceline is a sell today. It broke through the yellow. It's going to head to the purple. So Priceline's a good sell signal. Let's take a look at DDD really quickly. DDD it has crossed below the cloud, which means it's bearish. It bounced up and then sold back off. So DDD is a good little short. So that wraps it up for me. I appreciate you guys having me. Here's the link one more time, hubertcenters.com/March. 50% discount only for the first 50 people. Area code 859-963-3445. Thanks a lot. Good luck, and I hope it helps.
Hubert, thank you once again for taking time out of the day to go ahead and join us today in the presentation. That was a very great presentation. I hope everyone got a lot out of it. Just to repeat the actual telephone number and the link, that was 859-963-3445. And the link was hubertcenters.com/March.